Hello. Welcome to my channel, my dear friends. My name is Abhilash, and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So gold positive for 7th straight week. Gold is from record high, and this is the chart of gold. Finally, we can see that gold is coming for some correction, because we have discussed many times that gold was trading in a very fragile or delicate zone. Buying was also very risky, and as gold was flying or gold was in uptrend, so selling was also not an option. But finally we can see that there have been some selling on the chart of gold on Friday, and as expected, yesterday's Friday was totally crazy. As I told you guys that Fridays can be dangerous also. So if you took sell on Friday, then hopefully you made some profit. To be honest, okay, I was on buy side, because when the sell came, I had a buy limit, and the selling pressure was a little high and my SL was hit. After that, I saw that okay, it was not good to take a buy, so I did not enter it again. Or to be honest, I did not go with the sale also. So I took only one buy and my SL was hit, and I just wanted to observe the market, and I saw the selling pressure is quite high. Okay, so ultimately market closed around 2880. This is the last traded price on gold. So right now the thing is that whether this is a trend reversal or whether this is just a correction. So let's try to find out. So gold is to 2920 per ounce mark on Friday, after having tested record highs of 2940 earlier in the session, as market assess global demand for safety and the outlook of Fed's monetary policy. US President Donald Trump stated that the US will negotiate a ceasefire with Moscow over Russia's war with Ukraine, raising expectations that the conflict may come to an end in the future, supporting risk assets in Europe. You must be knowing that there's a hope right now that this war between Russia and Ukraine is about to end, because of which we can also see euro going up. So there is a high chance that finally the war is about to end. But gold was flying. Gold crossed 2800, 2900, not because of the war between Russia and Ukraine. It was because of the trade. So here you can see precious metals remain supported by the looming threat of a trade war between the US and major trading partners, after President Trump ordered the Commerce Department to raise tariffs and reciprocate barriers it deems necessary to balance flows. So the trade is still there in the market. Obviously, we are heading towards a positive reaction regarding the war between Russia and Ukraine, but gold have been bullish not because of because of the war, but because of the tariff trade. Okay, and that has not come to a solution yet. So I think that this is not a trend reversal, rather this is just a technical correction, and there is a big difference between technical correction and trend reversal, because technical corrections are temporary and trade reversals, or not trade reversal, trend reversals, okay, they last for a couple of weeks to couple of months. For example, gold was bullish, okay, so it lasted for a long time, because this is a trend of the market, and this is just a technical correction right now, because at this moment we don't have any solid information, solid news that can change the direction of the market, or at least while recording the video we don't have any news. For example, during the weekend, if any news comes out that brings further selling pressure, that's a different story. But right now, apart from these information, we don't have any solid fundamental reason that will bring a trend reversal on gold towards 2700-2600. And if you look at a daily chart of gold, we can see gold has formed a bearish engulfing pattern, and bearish engulfing pattern also a trend reversal pattern. But as we all know, my dear friends, okay, when gold was super bullish for the last couple of weeks, gold have given signs of trend reversal many times, but next day we see gold going up again. So let's not completely go with the technical. We need to understand that market sentiment is above all, not the candlestick patterns and analysis. Okay, so Monday is going to be very, very important for gold traders, because on Monday, hopefully we will get a clear idea whether gold will be heading towards 2800 or gold will be going up again. But if it breaks, listen to me carefully, if gold breaks 2850, we can expect further downside. And at this moment, I don't think so gold will be going for a complete trend reversal. Let me explain why. My dear friends, we have seen the options data couple of times or many times. In fact, 2-3 days ago I told you guys that there is a very negligible chance that gold will break to 3000 level, and the reason was we had huge number of contracts standing at 3000, and now we can see that the contracts at 3000 are still standing. Means in case gold starts flying also, chances of gold heading above 3000 is very less. Where is 3000? There it is. See, we still have around 12,000 contracts standing at 3000 level. So I don't think so gold will break 3000 in the month of February. In the month of March, I'm not sure, but in the month of February, we still have high resistance at 3000. And regarding the support, okay, if you're wondering, okay, let me show you. Okay, regarding the support, we have the highest contract standing at 2800. See, you can see at 2800 we have 6000 contracts, and if I go below 2800, we can see that we do not have major contracts. So right now, if market falls also, there's a high chance that gold will not be able to break 2800 at the bottom. If any news comes out, that's a different story, because news gives a direction, but without news, okay, this will just be a technical correction and gold will bounce back from 2800 or near about 2800. So what are the trading opportunities then? Okay, let's discuss one by one. So first of all, if you are a positional trader, okay, if you're a positional trader, swing trader, hopefully you have already exited from your buy position, because I told you guys that you can put your stop loss below 2900. If market falls below 2900, exit, you will get a better discounted price. So you can expect that in the coming days you will get a bit better discounted price, so that you can buy again. Position traders, swing traders, I will not recommend any sell position, because gold is fundamentally bullish always. Especially if you're a position traders, you should never think about selling opportunities. You should always consider buy only, because fundamentally the yellow metal is always bullish. And if you're a day trader, okay, if you're a day trader, then also you need to be a little bit careful. Why? Because see, the first thing is, okay, if you're a day trader but you don't want to take high risk, if you only prefer to take logical trades, in that case I think you should wait for Monday. On Monday, observe the market. If you see market is falling, okay, if the selling pressure is very high, then you can look for a sell below 2850. Okay, but if you're a risk lover, if you prefer to take risks, okay, then you can trade around on the levels that I have mentioned here. Let's discuss one by one. So on Monday, after the market opening, if we see gold going down, okay, if we see gold going down, we can look for a sell below 2876, 2875 area. Okay, we can look for sell below this level. And how much we can expect? We can expect at least 70 to 80 pips, because we have the next support around 2865. We have the next support around 2865, the first dotted line here. If you see gold taking support, if the selling pressure is not very high, if the selling pressure is not very high, in that case we can look for a support around 2865 area, and we can go for a buy position. But if you see the selling price is very high, then just avoid the buy opportunity and just you can continue with a sell position. The second buying opportunity on the chart of gold, or the second support on the chart of gold, is around 285 to 2850. 2850 is a round number. Along with that, we have seen price rejection around this area, so we are considering this support as well. If you see volume is low, market is taking support, then only look for a buy around 2850, 5253 area. If you see selling pressure is high, for example, yesterday what we saw was market forming huge candles. So if you see similar candles, then just forget about buying, only focus on selling. And after the market opening, if gold goes up and you are looking for new positions, in that case, okay, you can draw FIBO like this. So on the chart of gold, okay, as per FIBO, the best selling opportunities are around 2909 and 2916 because of FIBO 50% retracement level and FIBO 61.8% retracement level. Along with that, we also have the dynamic resistance. We have the moving averages. Okay, so we are considering these two areas. But sometimes we see that market, after the market opening, volume is very low. In that case, if you want to take some risk, if you are comfortable, then you can look for sell around the other levels also, which are 2901 and 289293. Okay, so 289293, 2901, these are not very strong levels, but if the volume of the market is low, if you see very weak recovery on gold, then you can look for a sell. Otherwise, 2909, 2916 seems to be better level to go for a sell position. So let me wrap it up because we have discussed many things. You might get confused. So my dear friends, on the chart of gold on Friday, we saw good amount of selling pressure. I also had a buy position and my SL was hit. After that, I did not enter. Okay, and market closed around 2880, 2882 area. So right now the thing is whether this is a trend reversal or a correction. Okay, but trend reversal and corrections, okay, they are different things, because trend reversals last for a couple of days and weeks, whereas corrections are temporary. And for any trend reversal, we need a solid fundamental reason or news. Right now, we don't have it. Okay, so this can be a technical correction only, because see, no market can go up in a straight line and no market can go down in a straight line. There needs to be retracement and pullbacks. On a daily chart of gold, we have seen a market forming a bearish engulfing pattern, but chances are high that, okay, after 1 or 2 days, okay, this may not be very much valid, because earlier also we have seen many times on gold that after indicating a trend reversal, gold betrays us. So I won't go with the candlestick pattern here. Let's go with the market sentiment. So if you are position trader, swing trader, I hope you have exited. So if you're looking for a new position, you should wait for a better discounted price. It can be 2850, it can be around 2800. So if market breaks 2850 area, then as a swing trader, position trader, you can expect to enter around 2800. That will be a better price. But if you see market taking support around 2850 area, you can enter there as well. Okay, and if you're a day trader, but if you don't want to take much risk, then obviously you need to wait Monday and observe whether market goes up or goes down. But if you are a risk lover, if risk is your middle name, in that case, okay, you can trade around the levels that we discussed. But whatever we discuss, okay, those are risky levels, because right now we don't have any confirmation regarding trend reversal or trend reversal or what is it correction. Okay, so if market breaks to its okay, if market breaks to its 7675 area, we can look for a sell after the market opening. Okay, but it's a risky level, because for any breakdown, volume is important. If you don't want to take risk, skip it. On the other hand, if you find market taking support around 2865 or 285250 area, you can look for a buy. 285052 is a better level to take a buy position. Okay, and for market to continue the downside, market needs to break 2850. Then only we can think about further correction. Okay, if market fails to break 2850 area, then correction may not last longer. Okay, and on the other hand, if market goes up after the market opening, we can look for sell on rise. 2909, 2916 are the best levels to take a sell. Okay, they seem to be strong ones. Okay, but if market is very weak, if you can also look for sell around 2901 and 289, 293 area also. Market opening is going to be very important. If you see after the market opening, gold is suddenly forming big green candles, okay, go with the fall flow again, or just wait for 5 to 6 hours and just observe the market. Okay, and stay in touch with the news. Any news during the weekend will bring heavy changes on this chart. So please be careful, use proper stop loss. Whatever you do, go with a stop loss of 50 to 60 pips. After 50 pips, if you see that trade is still going in the opposite direction, just exit. Because 100% accuracy is not possible in the market, but exiting at the right moment, right time is very important for all of us. Okay, so have a lovely weekend. Sorry for a long video. It took time to explain the things. That's all from my side, my dear friends. Thank you so much. Bye bye. Take care.